This is sj.daytrades. I've been day trading for the last couple of years profitably, and I'm here to help you understand where gold is going to go next. This week is also a huge week for gold. I'll explain why near the end. There's some big economic events happening this week that are going to set the tone for the market for the next couple of months. But let's start off with the technical breakdown, jumping into the charts on the monthly time frame. This makes our job a little bit easier because it's hyper bullish on the monthly time frame. We broke out of this consolidation a while ago, have just been heading up from there. You can see when we zoom out what's happening is that we hit this ceiling when we set this all-time high, and we're in the process of filling this wick. And the rate at which we're filling this wick, we've already long passed the halfway mark on this wick, shows that there's a lot of bullish momentum, which aligns with what's happening economically. This bullish momentum aligns perfectly with where the dollar is. You have to remember that these two move together, and you can see that on the monthly time frame for the dollar, we're actually consistently rejecting at this level, which aligns perfectly with how bullish gold is at the moment. Dropping into the weekly time frame, we can see further confirmation with the last high about to be passed right now. We're at the beginning of the week right now, so this is a really good sign. Ideally, I'd love to see the weekly close above this last high, and it looks like that's what we're setting up for. It looks like dollar's setting up for a beautiful uptrend. We set the low right here, and it looks like we're about to set another high. I wouldn't say we're going to go this far up, but we'll get into that. Dropping down to the daily time frame. So initially, I thought that we would stay within this channel, but surprisingly, we are looking very bullish at the moment. You can see that here we set the last high, and we broke straight through this high, and it looks like the momentum may carry us through the top of this channel. Usually what I like to see is a rejection happening at these kind of channel tops. I was hoping that maybe we could move to the bottom of this channel, get a long in here, but it looks like we have so much momentum that we might not even get a pullback, or at least for price to retest this channel high. We might just break straight through this channel and start to retest this high, especially because we have this double bottom here. So you may be wondering, why is it so bullish that we broke this last high? Well, what you have to see is, let's use one of my favorite tools. It's the fib retracement. It'll give you some key levels. We take it from the high to the low, and you can see here it has things like the halfway retracement, the 0.6 level. This is the golden ratio. I'd suggest looking into this after. It'll give you some strong key levels. And right here, you can see that we hit the 0.6 and we strongly rejected. These are levels that are consistently respected in Forex. So for us to break straight through this level with this much strength shows me that there's a lot of bullish momentum here. If you are looking to trade this week, you need to understand that the majority of the bullish move, at least within this channel, has already been captured. This double bottom, a lot of people rode this up into this level, and right now we're kind of at the end of this bullish move. We're still in a bullish leg because we had this dip, and now we're continuing this, potentially setting another high. But I'm just saying that you should have caution regarding this area in particular, because we have not only the high, but we also have these equal highs here, the equal lows right below that, creating an area of resistance right around here. And you can see that this is being respected right now. Literally live, you can see price is still struggling to get past this area. Now, there's three setups in particular that I'll be looking for this week. The first one is the most bullish case, is if we just break straight through this level, retest, potentially break back into the channel and start moving further up. The second case is we break this level, but we start rejecting at the channel top and we start making our way towards the bottom of this channel again. And the third scenario that I'm seeing is that we begin to reject either at this level, because we do have this daily resistance up here, or within the daily resistance itself, and start to move towards the bottom of this channel again. Now you're probably wondering how to determine which of these three scenarios will occur. So that's where we need to take into consideration fundamentals and economic events happening this week. And this is why I said this week is so important, because if we go to market and we check the economic calendar, Monday 8 a.m. we have Powell's speech. If you're seeing this video after the speech has already taken place, you want to check this speech and see the outcome, because gold and most of the market moves on the interest rate, and the Fed is the one that decides this. If you've been following the market since the beginning of this month, you'd know that the interest rate cuts probability went down to around 40%, and then it bumped all the way back up to around the 80% range. And this is a game that the Fed constantly plays with the interest rates. This is what makes the markets difficult to predict, because there's day-to-day shifts that happen. Nobody really knows 100% what exactly is going to happen, but if you follow along with these economic events, you're able to increase the probability of your winning trades by a substantial amount. Let's say, for example, tomorrow Powell has his speech and he suggests that it's almost guaranteed that we have Fed rate cuts, right? What's going to happen is gold is going to go up. Gold increases on interest rates decreasing. Pair that with something like the ISM manufacturing PMI coming out where it shows that the economy is struggling. Now you have two bullish catalysts, and this gives you a much higher probability for the bullish case to take place. And going back to the charts, you can see that by having so much bullish catalyst, we'd be able to narrow down the scenarios and come down to just one or two setups. Like in this case, we'd be able to take out the bearish setups and we'd have a clean plan on how to approach the week. Going back to market, again, this is the missing piece. It's the fundamentals. It's what's happening economically this week. So let's go over the important events. We've already gone over the Fed Powell speech that will happen Monday. We have ISM manufacturing PMI. This will also happen on Monday in the morning. These events with the EU are important as well, but not as significant, including this PMI. Again, with these, you generally just want to see, is the economy strengthening or is it weakening? What I'd focus on are the US events happening right now. So we have ADP employment change, we have ISM services PMI, and you can see thanks to market that forecast is already much lower than last time, which just goes to show like how bad shape the US economy and the Western economy in general is. And thanks to market, we can see things like the ADP employment change is most likely coming substantially lower than it was previously, which just goes to show how rough of a state the US economy is in at the moment. The Western economy in general, which is very bullish for gold. Now remember, the way that you read this economic data is that you want to see whether the actual that is released is lower or higher than the forecast. With market, it makes it easier. You can just jump right into the impact and see whether how higher or lower affects what you're trading. So in this case, you just want to remember that whatever indicators show that the economy is getting worse, it's typically bullish for gold. If you see it coming far lower than forecast, this will be a very bullish catalyst. My personal advice to you is to focus on the American economic events that are happening this week again. So we've covered up until Wednesday. Let's see what we have at the end of the week. And at the end of the week, we have PI, we have unemployment rates coming for Canada, and we have the Michigan Consumer Sentiment Index. So again, it's just data backing up how the economy is doing. This should move the market as well, but I would consider the Powell speech the most significant within this week. This will really set the tone for gold, and then the following data will just solidify the sentiment that Powell puts out tomorrow. So if you are trading gold, definitely tune in tomorrow 8 a.m. for the Powell speech. This speech is extremely significant. This will set the tone for the rest of the week, especially because we had the government shutdown for the last few months. We have a lot of uncertainty in the market, and this speech and the data will really solidify the sentiment going forward. So just to recap, leaning very bullish on gold. I would look out for some bullish setups this week. This is sj.daytrades. Make sure to like, subscribe, and comment for further breakdowns. I'll be breaking down the market specifically for gold every single week. So if you day trade gold or if you invest in gold, these are videos for you. I hope you enjoyed. I hope this is helpful, and have a good one.